Okay, welcome back to another episode of the Virtual Bacon Show, Virtual Bacon Podcast. I'm your host, Virtual Bacon. And today we have the Tuesday show where we cover the market insights. So a lot to cover today. Of course, we'll have Bitcoin analysis, Ethereum analysis, Bitcoin dominance analysis, as well as a bit of look at ETH performance against Bitcoin and see whether it still has strength left after the merge. And then after that, we'll have quite a bit of alpha news and insights going into the week. So on the agenda for today, we have ApeCoin Staking Launch, a full deep dive carrying on from last week. We will have Atom 2.0, which is a major event that will be update. The update will come live, I think, just over a week later at Cosmos HQ. And then we'll have Axelar, which is another cross-chain project, really big, potentially launching soon. And I'll give you a bit of alpha again as well on how I'm finding kind of new opportunities in this market by tracking some of the latest ICOs and fundraising. So yeah, that's everything on the agenda today. Thanks for tuning in. And before we get started, if you want to see more of these type of content, make sure you check out the show notes below and follow all my socials. And of course, please join our Discord, discord.gg/bacon if you want to have more one-on-one conversations, ask more questions. We have a whole community there, and we'll have more Q&A type of videos coming soon as well that will collect questions from the Discord. So yeah, let's get right into it. First off, let me give you guys a brief overview of analysis of Bitcoin's analysis and what I'm looking at right now. So Bitcoin is currently, in summary, hanging on to a very kind of crucial level, right around 19K, 18.5K-ish. So two main kind of indicators / signals that I'm looking at. The first one is the 200 weekly moving average, simple moving average. So here on TradingView, you can bring up the indicator. And if you are on something like Bitstamp, which has a super long price history of Bitcoin, you can see that the 200 weekly MA has been respected since Bitcoin's existence, right? Every time Bitcoin has touched the 200 weekly MA, it very quickly bounced from it. However, in the recent market dump, starting from May-ish, we actually broke below the 200 weekly MA, which is a really bad sign, right? So this really kind of broke the bottom line for even a super long-term support level. So now the question is, in order for Bitcoin to get back above, into a uptrend again, this is a very key resistance now. So the 200 weekly MA, this curve line here, you can see is right at around 23.4K. And it'll eventually average out to around 24K-ish if Bitcoin does have a bounce. So that's kind of the first sign of resistance that is very crucial if Bitcoin is to see life again. And then secondly, looking at more horizontal support and resistance levels, right? We have in the very short term, right? Looking at the daily chart, we have the 18K, 18.5K or 19K level, right? Which was support here, support here, support here, recently support first week of September, and now we're touching that support again. So it's been touched 5 times as a key support. This is a very crucial support now for it to not make another low below this previous low here. Because if that turns out to be the case, then effectively this downtrend that we've had since November last year will continue. Until that happens, however, Bitcoin technically is in a sideways chop movement, which is not bullish nor bearish. So that 19K is the key support level that we must hold above. And if 19K does get broken, which is also back here, you can see it's a very crucial level. Also, the previous all-time high in 2018 is also at 19K. So if this level does get broken, the next potential level, unfortunately, I'm looking at around 12K here. You can see back on the weekly chart, where are the next levels of support potentially? Well, we can look at the previous resistances back in February of 2018, and then the top of the 2019 rally, as well as the long summer of accumulation in 2020. All of these three touches make up this level right around 12K. So if 19K does give, I think 12K is likely on the table. Having said that, 19K is not broken yet, right? So you have to watch this very closely for, I would say, at least a weekly close below 18.5K. So any sort of these wicks, right, does not count. So that's 19K, which is the support level. And then the key resistance level is right around 24K. So 24K is not only the 200 weekly MA here, but also it's the previous high here that we made on the bounce from June to August. So in order for Bitcoin to turn around and start a new uptrend again, we need to see a series of higher highs and higher lows being formed again. So that's why this 24K high is so important, because if Bitcoin can manage to firstly hold above 18K here, and then get back above this resistance at 24K, what that will show us is effectively a double bottom here, right? Followed by a higher low above 19K and a higher high above 24K, right? So that would signal the reversal and a potential uptrend again. That's a lot to ask for, obviously, at the current point, because Bitcoin is still hanging on right at, the 19K support. But this scenario could still happen, right? For all we know, for all I see right now, Bitcoin is in a sideways chop, right? Between kind of 19K support and 24K resistance, right? And a couple moves that it could make next, right? Break below 19K, looking at potentially 12K. If it bounces from 19K, then great. It's still within a sideways kind of non-trending period. It's choppy, but at least it's not bearish. And if it bounces very significantly above 24K, then that becomes bullish, because that will have been a double bottom again, and it will have made a new higher high, right? So that's my current views on Bitcoin, looking at pretty much only long-term, right? Daily and weekly charts. So all things considered, it's looking pretty scary here at 19K. This really has to hold, but not jumping to conclusions, right? Let's wait for the next week or two to see what really happens to this candle, and then we can decide after. So yeah, that's my view on Bitcoin for now. Moving on, let's look at Ethereum. So Ethereum, first off, against the dollar chart is quite interesting, actually. So despite Bitcoin being in a pretty rough period right now, Ethereum is showing strength against Bitcoin. First off, you can see since the May drop here that we've had, right? These lows, Ethereum has not revisited it, right? Obviously, this rally was highly fueled by the ETH merge narrative. However, even after the merge and we had a huge dump, it still hasn't visited these previous levels. So this is a really good sign, right? If you look at these levels kind of on the Bitcoin chart, so the 1K support here, right, for Ethereum is kind of like the 19K level for Bitcoin. And that's why you see, that's why I say Ethereum is showing a bit more strength than Bitcoin, because it hasn't touched the bottom of these support levels yet. So while it hasn't touched that yet, it still needs to hold this level, right? So 1K is the key support level for Ethereum to hold. any sort of bounce that and low that it could show here would signal a higher low. That would be a really good sign. So we need to hold above 1K and potentially bounce, right? That is kind of the best case scenario for ETH bulls. And on the resistance side, we have right around 19K here, which was the top of the ETH merge rally, as well as 3 touches here back in the first crash in 2021, as well as the top of accumulation ranges here in the beginning of 2021. So this is a very significant level as well, very similar to 24K-ish on Bitcoin. So in order for Ethereum to start an uptrend again, right? First, we have to respect the 1K low, and then we have to take out the 19K high, right? So if it can do something like this, where it bounces and then takes out the 19K high here and makes a new higher high, this will be a really good sign, because effectively it would have made, a low, a high, higher low, higher high, right? Which would signal a new uptrend. Having said that, it hasn't shown that yet, right? So I'm just giving you kind of the most bullish case. But the bearish case would be, if it does not hold above 1K, then we could be looking at much lower levels, right? So we still have a bit of buffer to go. So that's why, Ethereum is looking a bit stronger than Bitcoin. And let me give you another perspective as well, to compare ETH versus Bitcoin directly to show their strength against each other. So this is the ETH BTC chart. You can see this on Binance. It has a lot of history. And this is very interesting because you see this really isn't in a bear market at all, right? This hasn't even seen the major crash that we've had throughout crypto, right? So for all we see here, right, Ethereum against Bitcoin, the ratio is still right around the breakout levels here, right? We've had this key level right around 0.085, which was first tested in May of 2021, then in December 2021, and now again, leading up to the ETH merge, September 2022, right? So basically, for the past year and a half, 15 months or so, ETH has held super well against Bitcoin, right? It has not lost any value against Bitcoin, because you can see this has been trending sideways, ETH BTC chart. So this is a really good sign. And potentially, right, if ETH versus Bitcoin can break above 0.085, then that would mean a very, very bullish sign for Ethereum. And that could be actually something like a potentially flippening happening, because this would lead for us to test the all-time highs again with ETH versus Bitcoin ratio. And so far, I think ETH is making a run for it, leading up, to the ETH merge, and especially given that, I'm personally super bullish on ETH merge, and a few months after the merge, when the real effects start to kick in. So I'm optimistic for this resistance level to be broken. Now, obviously, it hasn't been broken yet, so we still need to, see a potential bounce here first. So we respect this low here. And then second of all, break above the 0.085 resistance. But remaining optimistic on this. So yeah. Next up, last chart we want to look at is actually Bitcoin dominance. So I haven't looked at Bitcoin dominance for a while, haven't covered it for a while, but quick TLDR, quick explainer for Bitcoin dominance. It's the market cap of Bitcoin divided by the total market cap of all cryptos. That's what Bitcoin dominance is. That's how it's calculated. You see there's a percentage here on the chart, right? So currently, Bitcoin makes up about 40% of the entire total market cap of all crypto. So historically, what Bitcoin dominance is able to tell us is whenever Bitcoin dominance is falling, like in this period from beginning of end of 2020 to kind of May of 2021, this is where the major alt season is. This is where everything rallies, right? And then conversely, when we see Bitcoin dominance rising, this means money is flowing from speculative altcoins back into Bitcoin as people take profits, people are scared, and this is usually a bearish time where you want to stay risk off. So looking at more recent months for Bitcoin dominance, you see ever since the May crash, actually not the May crash, the 2021 bull market rally, right? Ever since May of 2021, Bitcoin dominance has been oscillating in this range, right? The top of the range is right around 48%. The bottom of the range right around 40%, right? And this is very interesting because this has been a pretty clear signal for the past 15 months. So whenever Bitcoin dominance has revisited 40% in this level, in this oscillation or this channel, what you could have done is take a risk off, right? So when it revisits these levels, it has been signaling 3 times now that altcoins has had their run against Bitcoin for a while, but money is likely to flow back into safer assets like Bitcoin and Tether again. So whenever Bitcoin touches the bottom of this channel, it's a good time to take risk off, to take profits, to cut your speculative positions and go back into stuff like Bitcoin and Ethereum. And on the other hand, whenever Bitcoin touched the tops of this channel, again also 3 times or so, it signaled a good time to actually be risk on. Usually that means when people have been scared long enough and opportunities are developing in the market. So it's a good time to start scaling into altcoins. So as you can see, currently Bitcoin just touched the 40% level right around last week, and it's starting to see a bounce, right? So this is giving me a little bit of worry for my short-term altcoin positions. So I'm starting to consider taking some risk off here from the recent altcoin positions that I've had, and then just waiting to see if Bitcoin will actually see a bounce here. The Bitcoin dominance will see a bounce here, and then there's no rush, right? I'd rather take the clear signal until Bitcoin dominance reaches 48% again, then I can put on altcoin risk again. So I think if you look at Bitcoin dominance chart, this is pretty clear kind of signal for risk on, risk off kind of multi-month market outlook, which I will start using this. So let's see how this goes. So obviously, if Bitcoin dominance does break below 40%, this strategy will be invalidated. Same as if it rallies to 48% and breaks above it, obviously that side will be invalidated as well. But for the past, year and a half, this has worked. So I shall continue to follow this. So that's Bitcoin dominance analysis. I think this is pretty useful actually. Okay, so next up, let's look at some market insights, specifically some of the alpha events that's happening in the next week or so. First off, we have the ApeCoin Staking launch. I talked about this briefly last week. So ApeCoin, as you guys know, is the cryptocurrency for the Bored Ape Yacht Club, Mutant Ape Yacht Club ecosystem. They launched a coin around, I don't remember. But nonetheless, right, there's a major update coming for staking to come to the entire Bored Ape Yacht Club ecosystem. And the major update will be happening on just in 2 days, on September 22nd. There will be a Twitter Spaces held by Horizon Labs, which is the developers of the ApeCoin staking platform. So let me give you a TLDR here. So basically, how this staking will work is that if you hold Bored Ape Yacht Club, Mutant Ape Yacht Club Bored Ape Kennel Club, which are the dogs that come with it, or if you just hold ApeCoin itself, you have 4 types of staking that you can do. So the lowest rate that you can get from staking is the pure ApeCoin staking. And then for Bored Ape Yacht Club and Mutant Ape Yacht Club owners, you have a maximum contribution amount of ApeCoin that you can stake alongside each NFT that you own, as well as some extras for the Bored Ape Kennel Club holders. So that's the gist of it. There's a major alpha though, which is this is likely to be a very high APR staking at launch. So if you look at this thread here by Ouroboros Capital, so essentially in the first year, there will be 100 million ape coins distributed to stakers. 30% of that will go to 30 million of that will go to ApeCoin holders, 47 million will go to Bored Ape Yacht Club NFT holders, 19 million to Mutant Ape Yacht Club, and 3.8 million for Bored Ape Kennel Club. And people have done the calculations on this. There's actually a handy Dune Analytics dashboard here that you can check out, which will give you all of these staking rates potential. So the average staking rate for the entire kind of program will be around 60% APY. And the 4 types of staking, right? If you only stake ApeCoin, the ERC20 coin itself, you will get around 37% APY. But if you scroll down on this analytics, you see if you paired a Bored Ape Yacht Club NFT with ApeCoin, you can get actually 329% APY. This is super high. And for Mutant Ape Yacht Club, you can get 484% APY. Why are these rates so high? Well, that's because most Bored Ape Yacht Club and Mutant Ape Yacht Club NFT holders don't hold enough ape coins currently. They don't hold the maximum staking amounts here. So that's why for the limited number of ape coins held by these NFT holders, they're getting super high APY staking rewards, right? Because they share the same pool. And that's where the alpha is. Effectively, once this launches, right, all of the existing Bored Ape Yacht Club and Mutant Ape Yacht Club holders will see these potential staking reward rates, and they will have to buy more ape in order to stake them and take advantage of these rates and to dilute these staking pools until they go down enough to an equilibrium level. That would definitely be under 100%, right? Which is when people might consider this as fair. Right now, these are definitely way too high, so people will want to buy ApeCoin to stake. So people have done more calculations into this actually. So how much buying power will this actually bring? Well, people have tallied all of the Bored Ape Yacht Club and Mutant Ape Yacht Club NFT holders, right, along with how much ape coins they held, and summarize the total numbers if all of the NFT holders bought up the maximum stakeable amount, right? So this will amount to 100 million ape coins being purchased from the market, which at current price is right around $500 million in buying power, in buying pressure. This is huge, right? So this is, I guess, the main alpha, right? Most people still don't know about this, or they haven't looked into the pure math of it yet. They just know it's going to be some kind of staking, but once the staking actually comes out, they'll actually see, wow, this is a huge opportunity. They'll all rush to buy. So, last but not least, this actually has a cool effect, because once this buying pressure kicks in, ApeCoin will not stay at $5, right? It's likely to see an increase. And what that is likely to bring is a flywheel effect, where when ApeCoin's price increases, the staking APY will also increase because your reward amount in dollar value increased, right? And that will actually drive even more buying for Bored Ape Yacht Club, Millionaire Yacht Club, and ApeCoin holders. So obviously, it's not gonna last forever. It's gonna be a pretty short-term mispricing in the market, right? So personally, I'm not looking to all in Bored Ape Yacht Club or anything and stake. No, I'm just looking at potentially buying up some ApeCoin in anticipation for this misprice in the yield to be balanced out as kind of a short to medium trade, short to medium term trade. And yeah, that's how I'm looking at it. That's how I plan to play it. So I'm following this very closely, especially the Twitter Spaces on September 22nd. Next up, we have Atom 2.0. So I've talked about this briefly on TikTok already. So Atom 2.0 is coming. It's going to be revealed on September 28th at the Cosmoverse HQ event. So Atom 2.0 is actually a very significant upgrade because Cosmos, the technology, actually powers a ton of projects in crypto. Let me bring up the Cosmos ecosystem chart, and you can see just how much. So there's a total combined market cap of $59 billion of all the tokens that currently run on Cosmos technology, right? What are they? Well, Binance Coin, Cosmos itself, Chronos, OKX Chain, Luna Classic, EVMOS, the original Luna, Thor Chain, Juno, Secret, Injective. These are huge networks, right? And they all run either on IBC or on the Cosmos SDK. However, Cosmos coin itself never really seen the hype, right? It's still, I think, top 20 coins. I don't think it ever broke into top 10. In my opinion, based on how much adoption this has, it should be at least top 10, if not top 5. So why is this, hasn't the Cosmos been able to catch on? Well, the biggest reason, in my opinion, is its tokenomics. So Cosmos historically has had very high inflation at around 14-15% APY, just pure inflation-based staking. Anyone can stake Cosmos Atom, get more Atom just for the heck of it, right? And on top of that, Atom never had a hard cap. You can see the total supply and max supply are infinite on all the token trackers. Like, that's not good. So in order to bring scarcity back into Cosmos and Atom coin, they will be introducing new tokenomics, right? So two parts of this, right? First off, there will be a hard cap potentially introduced by cutting the inflation rates very dramatically, and then eventually saying there will be a hard cap. This will be one of the events to be revealed in the Cosmoverse HQ event next week. And the second thing is also very important. It's called interchain security. So interchain security, this is a pretty good article on it by Informal Systems. This this interchain security technology only applies to Cosmos. Effectively, what it means is currently you have a bunch of chains that run on the Cosmos SDK. They, like Binance Chain, Chronos, etc. They need to have their own stakers in order to run validators to secure the network. Once interchain security comes out, what Cosmos is able to do is for stakers that are helping secure the Cosmos network by staking Atom, these stakers can actually lend their staking power and thus their kind of security for a chain to any new chains that launch on the Cosmos ecosystem. So for example, if I were to launch a Bacon chain on Cosmos SDK, I don't have any stakers, right? The chain is not secure. People can attack it by having majority stake. what I can do is lease some or borrow some of the staking power from the main Cosmos chain. And then in return, I give Bacon tokens from the Bacon chain to the Atom stakers on Cosmos. So this kind of an exchange will provide me with the security I need to run a new chain without getting my own stakers. And then for Cosmos itself, they will actually receive real utility income instead of pure inflation from new Atom coins being created. This is effectively what interchain security is. This has been a big kind of upgrade that has been years in the making. I think it's very smart. And this is supposed to roll out at this announcement as well next week. So these two are the main upgrades coming to Atom 2.0. As you can see from what I just explained, both of these contribute significantly to cutting the inflation of Atom coin, as well as adding real utility income for Atom coin itself. So dramatically improving its tokenomics so that the Atom coin can really appreciate in value based on how much adoption there is for the Cosmos technology. So this is really key, and I hope this actually succeeds and bring the much deserved hype finally to the Cosmos ecosystem. Okay. Lastly, the last piece of alpha I want to bring you is a new network that's launching called Axelar. So Axelar is a cross-chain protocol, not only a token bridge, but it's actually a generic cross-chain protocol that allows smart contracts to talk to each other. Think of Layer 0, I think is the perfect example, and Stargate, which runs on Layer 0. Although there are token bridges that can run on Axelar and Layer 0, that's not the only thing they support, right? You can have multi-chain smart contracts, right? For example, you deploy a dApp on Ethereum and Polygon and Solana and Avalanche all together, right? And then by approving one transaction, all four chains does some activity. Now, Axelar takes the exact same approach, but as far as I've been following the cross-chain ecosystem kind of competition, Axelar is an even longer term and bigger project than Layer 0, which is currently the market leader. So these guys are backed by some huge money. If you look on ETH Analysis, so this project has been in development since at least 2019. And you see in the 3 years that they've been developing this, they've raised over, let's see here, $63.75 million from pretty much everyone in the space here, right? And this is one round each year. So it shows that they consistently made progress every year and were able to convince more and bigger investors to invest at higher market caps, right? So this is always a good sign. And more recently, they actually did a ICO on CoinList in March of 2020, where they raised another $75 million from the public. And the public token sale price was $1 per AXL token, which at a total supply of 1 billion, that is $1 billion in market cap already. So back on the ICO analytics page, you can see all the private round prices, right? So the first seed round was 3 years ago, 2.8 cents, and then private round, 21 cents. And then this is important. The private 2 round price was also $1, right? So these $35 million raised in February by these, people like Polychain, Dragonfly, North Island VC, etc., they also paid $1 per coin. So same as the CoinList public sale. And you gotta remember, the private 2 round likely will have very long vesting schedule. So what's the alpha here? Why am I talking about this? Well, these guys will actually have supposed token release this week. I think end of this week or early next week, where the tokens will start trading. And because we're currently in a bear market, right? For this kind of valuation type of project to launch, it's very difficult for basically any project to launch over $1 billion in market cap and sustain that kind of trading, because it's a bear market. So I think the $1 billion valuation is super fair. Is, I would say, even undervalued for something like Axelar. It's a very big project. So I think what's likely to happen is once they start trading on exchanges, price is not going to go much higher than $1. I think it might even go there again, if not below it, simply because we're in a very bearish time. And that would be very alpha, right? Because effectively, if price gets to $1, I can buy some Axelar AXL tokens, and I will be getting the same price as their private round investors, which are locked up for super long. But instead of having a big lockup, I will be fully unlocked, right? So I think that would be a very alpha play if there does end up being a chance for this. So that's why I'm watching this very closely. I'm not sure which exchange they're going to list on yet. I haven't seen any announcement from it, but keep an eye out for Axelar, Medium, their Twitter announcements, their Discord, Telegram, etc., everything, to see where their token is going to list first, and track the price very closely. That's what I'm going to do. And yeah, I think this is, if this gets, again, back to around $1, I think this is a very easy play for me. Okay, so that's it for Axelar, and that's the all of the alpha news that I had for you guys this week. And lastly, I want to leave you with this. So how did I find, things like Axelar and things like, all these like new events happening and new token sales, new layer 1 ecosystems? I like to use actually 2 ICO tracking websites very frequently. So they are ICO Drops and ICO Analytics, right? So let me just show you how I use them. So first off, I would go on ICO Drops and look up the upcoming ICOs list. Now, this list is not all good, right? It has a lot of shitty projects mixed with, really good projects. Something like, Sui, Aptos, all kinds of stuff. So what I like to do is use the search function here and look up platform, which, filters out a bunch of stuff already. And then I would look up blockchain service. Usually when there's a new layer 1, it would be categorized as either blockchain service or platform. And then also I would try, protocol, which also gives, sometimes there can be layer 1 ecosystems under the protocol name, but most of the time it's something like a layer 2 or DeFi protocol. And then what I would do is, let's take something like Sui, for example, right? I would have found it by going in platform, or we can do this one. This is a new one called Empiric Network. I don't know what this is yet, right? So I would go in there. I would read the summary. Empiric Network is a ZK native Oracle bringing the principles of DeFi to data infrastructure, etc. Okay, so it's Oracle. It's built on Starkware, as you can see here pretty clearly. It has raised $7 million, which is pretty good. Usually I like to aim for at least projects that have raised more than $10 million, but 7 is, close enough to take a look at. And then I will look at kind of who the investors are. Okay, pretty good. They're closely working with Starkware, Jane Street, Variant, FTX, Robot, Alameda, all pretty good investors. So then, okay, great. Next up, right, I would go on their website, Medium, Twitter, etc., to see if they will have an ICO and when, right? This will be a pretty long process. Usually you have to dig pretty deep into their Telegram, Discord, etc., but it's worth the time, in my opinion. Another way you can do this is go on ICO Analytics, go to the token generation events, and sometimes, right, for example, like Axelar, they will show up here, giving you the date and everything and where the token sale would be. And then same thing here, you can go on the VC deal flow and filter by 10 million plus in funding, right? Click apply the filter, right? And then you can, again, look up, blockchain services or any other project categories here, right? And then click into each of these and figure out if they're going to have a public ICO anytime soon or a public listing anytime soon, right? And then carry out the same due diligence and valuation process, right? Try to figure out what their last round of investment, market cap is, and then take a note of it. And once it starts trading or once it has a public ICO, see if you can get the same price as the private round investors. If you can, usually that's a really good deal, right? So that's how I've been, doing kind of my bear market research. This can get really tedious. You need to dig into a lot of, social blog posts, Discord, Telegram, etc. And it's the bear market. A lot of people don't want to do this, but trust me, bear markets are where the opportunities are. You just need to put in some time, and you can get quite ahead by, studying all the new projects this way. That's, I think, where I'll leave you guys with. If you found this useful, consider dropping a like and leave me a comment, and check out all the links in the show notes. Again, thanks for tuning in, and I'll see you guys in the next episode.